Quick market update here, Thursday, October 23rd, lunchtime update. So the S&P, this is the 1 year chart, so just focused in again on this channel. I was doing some selling in here, as I mentioned in the last couple of videos. And we're basically, we were looking for a pullback up at this point. We saw some divergence, and we did get that, came down to the 50-day. And, we're bouncing between the 50-day moving average here, this blue line, and this upper trend line. So if we go back and look at the 2 year chart or 5 year chart, you can see we had a couple of hits. Again, this upper white trend line right here, that's what I'm really focused on right now. Again, we could break above that and form a new channel. And then this white trend line, we basically move that up and see where that goes. But that's a pretty good trend based on the bottom points here. We've got a pretty good symmetry. You can see all the points we hit on the bottom, from the 2022 bear market low, and then the April, low that we had April 7th. So, that, again, we're in a bull market, but I think when you start looking at some of the divergence, you can see here again, as I mentioned in the October 2nd video, the stochastic here is definitely waning. We're seeing some momentum slowing down here. And if I look at the MACD, let me just bring that up really quick here. Again, this is the S&P, but you can see this MACD, you're making lower highs. I could even draw a channel here, or just a quick. You can just see here how this is making lower highs here. If I touch these points here on the MACD, and again, this is moving average convergence divergence. See how that's going down. So every time we're making a new high in the market here on the S&P, and this follows for the NASDAQ as well, you can see as we're going higher and higher, this MACD is getting lower and lower. So that's called negative divergence. When you've got an index coming down and this is going up, that's positive divergence. You like to see that, for a bear market turnaround. But, this is certainly showing that we're probably going to have a more substantial pullback. I wouldn't be surprised we break the 50 on the next pullback and, end up somewhere between the 50 and 150, or between the 50 and the 200, somewhere around there. But in any event, wanted to show that. So I think, again, you want to sell in the strength. I've been saying, pullbacks are an opportunity, but it's nice to have some cash available when that does happen. And as we get up to this upper trend line again, I suspect we're going to probably see that. I mean, we're up nice today, 35 points in the S&P, 181 on the NASDAQ. So, it's good, again, to sell into some strength. But I do think we're going to have probably a more substantial pullback here based on this, the MACD, and then also if you look at Investors Business Daily, they've called out 5 distribution days. So if we look at the volume here really quick, so this is volume. You can see these red days, these little red volume days here. These are higher than the green days. So when you start accumulating distribution, you got to be concerned about that. So they've got 5 registered for the S&P, and when you usually get around 5, that's when they suggest taking some, put some get some cash. And so they're basically at this point, I think in their big picture article, what I've read this morning was they're recommending like between 40 and 60% in the market right now. So they've recommended to their subscribers to be less than half, between 40 and 60% invested at this point. So anyway, if we take a look at some of the stocks here, I'll go through the ones. These are start out with my larger holdings. Palantir, again, we were talking about this cup with handle here that kind of formed. We had a 190 here in August, round number 190, basically, that we couldn't get above. Look at my last video, October 2nd. We were just a couple of pennies, maybe 10 or 20 cents below that high, or the handle actually, which was 185.75, and you can see we're at 180.93. We pulled back to the 50-day here, the blue line. Let me bring that up to 6-month here. So you can see the blue line here, that's the 50-day moving average, and it's basically hugging that right now, that blue line right there. So, it's up today, nice, 5 points, 3.2%. But, you know, this one keeps chugging along. It looks very, very strong. Celsius, I'm talking about this one. We're buying this in the, you're buying this in the 30s. So we got a nice, got all the way up to 66.74. So nice run here with Celsius. And like I said, we should get up to 90, close to $100 here if we can retest this with this cup formation. These former highs. This is back from May of last year and in March. So this thing just keeps making higher highs and higher lows. So really good, strong stock. Here's my trend line here, this white line. So as long as we stay above that, I think we're in good shape. If we start testing that and breaking it on high volume, I'd be a little concerned. But so far, so good. Just keep letting that one ride. The trend is your friend until it ends, as the saying goes. AMD has been terrific. I really wish I had more of this. This thing just took off here with some of the partnership announcements. This has just been an incredible run here. I was talking about an opportunity here. If you look at my October 2nd, I was recommending this here when we had the pullback, in this area here. So this was right around, I guess, the time of my last video here, October 3rd. Yeah, October 4th or 6th, this thing took off here, huge gap up. So really, really nice move. This is, to me, a bull flag. So basically, just like I was talking about with uranium, the ETF, the last couple of months, you basically have your flagpole. This is the flag, and then you're going to have another flagpole. So you can basically take this flagpole and add it onto the flag. And if you look at uranium, that's exactly patterns don't always work out, but when they do, it's nice. You can see here with uranium, we were down in the 20s, about 20. Got up to the 40 area, formed the flag, and then look at that, we got right up to $60.51 from $19.50. So that was a perfect bull flag outcome here with this chart pattern. Again, this was your $40 range right here. So we went up $20 from the low. This was a fake breakdown, formed the flag or pennant here, and then got another flag pull that was equal to the first one, another $20 on that. So, and then it sold off. So I actually had a buy order in yesterday. I had it for 46.40, I think it was, and I just missed it. Got down to 47.15, so I missed it. I'm hoping maybe to get closer to the 50-day here, but this is probably a good one right here in this range to start looking at again. The stochastic is down, and uranium, again, I'm concerned about the indexes, but this one can often move independently of what the indexes are doing. Some of these things that are tied to commodities and precious metals and stuff like that. So, but anyway, this was a great chart pattern that completed bull flag, and it's nice when those work out. Let's see what else. AFRM, I've been talking about this one for a while. Got an opportunity to get back in this one here as far as the pullback that we got even mentioned, I think, that a 150. That's exactly what I mentioned on the October 2nd video. So this magenta line here is the 150-day moving average, and I said if we can get down there, that'd be about mid-channel. And sure enough, look at that. We got right to the 150, and we're getting a move here. So this was a great opportunity. I did pick up some more of this on this pullback. And if you remember, again, this was the existing channel, these two white lines. We got up there on earnings perfectly to the upper trend line. So again, when these patterns work out, these channels, it's a thing of beauty because, you can just really invest and do some swing trades based on that. But I was hoping this would come down to the 150, and it sure did, and I created another opportunity for that one. So I mentioned Lemonade. I think this one is a nice channel here that's formed. So I based, again, the lower white line here is my lower trend line on these data points here. We hit it again yesterday, so I was buying some more of this here, and I just basically did a symmetry pattern with this lower trend line and drew this upper one. So this is my channel now. If we break this, I'm out. Got my stop loss just below yesterday's low of 47.04, and we're already up to 51.57 today. Since we've been talking, the S&P's up another 10 points. So I really like this one a lot. It is below the 50 here, but because of this trend line, like I said in the last video, these trend lines take precedence over the moving averages. So I'm really, this is a great entry point right here because you put your stop loss right below yesterday's low and you're not going to lose a lot of money. And the reward, so the risk is very low. The reward is, look where we can go way up here, well above 60. So I think that's a good one. What else? FUTU, talked about this one in the previous videos. Got a nice pullback here, a little consolidation, and as long as we could hold these lows, I put my stop loss right below the 150, 159 low from October 10th. So I like this one a lot. RKLB was another one I mentioned. Had an opportunity here. And this was down around the 50-day moving average, and we got a nice pop here. So a little bit of a pullback to the 20-day, but I think this is a good stock. Higher highs, higher lows. It's in a nice trend. UNH, United Healthcare. I've been talking about this one the last couple of months. You can see how this thing was just completely oversold. I mean, this thing went down to levels that you hadn't seen since the financial crisis as far as the momentum indicators. So sure enough, we got a nice pop. We were down around 234.60 back on August 1st and got all the way as high as we got 374 October 8th. So it's consolidating around the 10 and 20-day moving averages. If we get down to the 50-day, I think that'd be a good buying opportunity if you're not already in this one. But I think this could easily go back and retest the highs here in the 600s. No question about it. Let's see what else. Zeta, I mentioned this one. This is a lower price stock here. We did break the lower channel, which I wasn't happy about, but came down to this magenta 150-day moving average. So I think this is a good area. Stochastic is low, but I think this presents a good buying opportunity. I would just put your stop loss below the October 17th low of 17.46, and so that's a little over $1 where we're trading right now. Apple. This was a big cup formation here. You can see this was around 260, 260.10, yeah, back in December of last year. And so came up, basically retested that at 259. I don't think we broke 260 there, did we? Yeah, we got up to like 259 there, October 3rd. And then just looked like we were going to form a handle, and all of a sudden the thing took off. So we're well above we're above 260 now, 260.24. So, this was basically a cup formation here, and then I thought we would have more of a bigger handle, but it looks like it's it's gotten above that 260 level. So we'll see if that holds. Amazon, I think, was a good opportunity here. The pullback that we got, you were basically retesting this 215 level. So that got down to 214.80, I think. Or I'm sorry, 211. Actually got down to 211.03 the other day. So I think this one is, it's up to 220 today, but I think this area here, this 211 is where I put my stop loss, just below 211. And we hit that back on August 4th as well, 211.42. So we just undercut it by a few pennies, but these double bottoms sometimes will do that. They undercut to basically, wipe out people that have got their stop losses below a former low, and then they'll take off from there. So I think this is a good buying opportunity as long as your stop losses, at 211, just below 211. All right, Mara, we've been talking about this one. This has kind of been again, we had this I thought was an inverse head and shoulder here. Still looks like this is playing out, from the April 7th lows. Again, we're making higher highs. So I've got my channel here. If we come down to the 50-day, I think that's a good buying opportunity, or even the 16 level here, this 200-day moving average, or this lower trend line. But again, I think longer term, this should test $30 up here, former highs. So yeah, we're trading at 1973 today. All right. Some of the new ones that I picked up, A-Lab. I really like this one a lot. I've got Fibonacci levels drawn on here. This came down to about the 50% level here. But came close to the magenta, which is the 150-day moving average, and then had a nice move today at 6%. So I do like this one, and this is my channel that I've drawn here. We've got a couple of points up here, but I do think this is a good stock. This is Astera Labs. NBIS, got this one on a limit order, so I put a limit order in just yesterday, right at the 50-day, and I was able to get it, just above the 50-day moving average, this blue line. So got a nice 6.87% move today, but that'll often happen in a good stock. You could see, this thing will come close to the 50-day, and had an opportunity here with this pullback. So we were all the way up to 141. We're at 105 right now, and we should, I'm thinking, retest that 141 level and hopefully break through that. Stochastic is low. Looks like it's turning around. It's below 20. So if we get above 20, that should hopefully start to move. Open, this is a AI stock here. Open Door Technologies. This thing just took off. You could see, I mean, this thing was like 50 cents or whatever. It went all the way up to $10.50. So I got a pullback here to the 50. So I was buying here. It's at the 50 level, the 50-day moving average, and we're up 5% today. So I do like this one. I think this is a longer term. This is like a buy and hold, basically. I think based on the AI stuff that's going on. APP is another one I really like. This is a little bit more expensive, 587, but came down to the 50-day, so I was buying here last couple of days. I do like this stock a lot. You can see the trend here is really good. I mean, just a really nice move from, back last year, January of last year, it was trading in the 30s, 40s, and now all of a sudden it's, went all the way up to 745 back in September. I mean, that's just an incredible stock. So I like that one a lot. Ribbon's another one. This is a electric vehicle, RIVN. They make parts for electric vehicles, so I like this one a lot. Hey, pardon the interruption there, but a couple of things I want to mention was the precious metal stocks. So these have pulled back a little bit. This one's Trilogy Metals. You can see it went all the way up to 11. Pull back here, more than 50% here. It's at 532 today, but this thing really took off with some of the stuff that's going on as far as the minerals and mining. So I like that one. USAR is another one. This has a nice pullback here. Starting to fill or fill the gap here that occurred back on October 3rd. This is USA Rare Earth class. And then another one is MP. MP Materials. This one also pulled back nicely. This was actually below the 50-day. So, this is, I think, a good area here, an opportunity to get into some of these that really took off. And, last few days, it really pulled back quite a bit. So that's the summary. The only other thing I'll mention is the VIX. I talked about that last time. I mentioned, based on the negative divergence and where we were with the trend line on the S&P, I thought we could, spike up to 20, and we got up to 25.43 on October 16th. So we did get that little spike there, and again, what I'm looking at is between the negative divergence on the MACD, the stochastic, and where we are with this, with this upper trend line on this channel. I'm thinking, we could see a more substantial pullback here, at least to the 50-day, if not more. I'm thinking, somewhere between the 50 and the 150. We'll have to see how that plays out, but I think that's certainly possible. If we break this thing and on high volume, then we'll have to, look at potentially a new channel that's formed above this, and that can certainly happen. If you look at, previous runs, when you see, bull markets here, you can see like this purple, um, pink line. This goes back to 2018 and 2020. We had the COVID correction, bear market, and then we came up, retested this February 2020 high, and then you can see we just went parabolic above that. Starting in 2020. This was just a great year, for the market here. 2020, 2021, before we peaked out in January of 22 and had the 22 bear market. But you can see here, this was a clear channel, this upper trend line. And once we broke through that, it just created another channel, which is what we're up against right now. So this channel from 2022, that January 22 and November of 21, that's basically what we're at right now. So we'll see if that holds, or if we go above like we did back here in 2020 and form a new channel. So that's what I'm looking at. Just got to react accordingly. Okay, hope everybody's doing well. Have a good rest of your day.